That
Wow, I didn't see that before. Jesus.
yeah, yeah, it's on its way, isn't it? I mean, there was an opportunity yesterday at the daily pivot, and that was it. That sort of as
Are you in?
no. Do you know what? I've got some shorts in, so I will take on a long in a little while, but it's not critical at this stage, so I don't really mind. I think there's going to be, I mean, we've come a long way, we've come pretty far, pretty fast. So a retracement is due, and I suspect it might be quite heavy. I think it's going to be quite interesting because we got the US trying to trade spat seemingly clearing up, but realistically, we don't know until
Chuckle,
December.
mate.
What's that, mate?
I said, pardon my chuckle.
Yeah, well, this is the thing, it's sort of, it's supposedly clearing up, but we don't really know until the 15th of December whether the tariffs will be lifted, and I guess what I'm looking for is just a retracement into that date. The rhetoric's there, but we know it's is it going to be a buy the rumor, sell the news, or buy the rumor, buy the news? I don't know, but it's one of those things that the more that people buy the rumor so aggressively, then the suspicion is that there's got to be a point where it gets priced in. So I think that there is a retracement coming. There's some interesting things on this chart as well. There's a little gap here, very small, but there is a little gap here, which still needs to be filled. There are, as I say, there is price action that just hasn't really kind of let up for quite some time. We look at the 4-hour chart, really steep move to the upside. The daily, we haven't really had any days, and you can see that this gap here is a little bit concerning. Indecision yesterday. We are at right on a level of resistance now, and I think if we take this area out, then there's some open water. That's where we are. So I'm just going to watch this, just probably for the first hour, just to make sure that it can close above. And if it does, then I'll take on a long because I think there's probably a lot to suggest that we're probably going to keep going. And I think there's quite a nice upper target as well. I do think that this area here may well be hit, and that is a good 150 pips away. I mean, it's possible that you see this left shoulder here as well. That's the exact spot we're on, pretty much. So I do think that if there is going to be some resistance, it's going to be here. But if we get through that, then we got some open water, and that open water, I think, will probably get us up here. So I'd quite like to see us come through here first before taking on anything on. I don't think this it's necessary to take on a long just yet. But I think there's every chance if we take that area out, as I say, that we're going to go. So back to the pivots, then the entry right now looks like the daily pivot looks a pretty good spot to me. There will be some support probably in play from that particular level there. There's also a trend line there, so it looks like a little 25 pip dip to the downside, and the longs will probably be initiated at that point, and that will give a little run up to that level and see if it can get through. Thanksgiving tomorrow. I can't find on Ray's
I was
website.
going to ask you that question. Yeah.
Yeah, I'm sure he's got it on there, but I can't find it. I'm sure he had some presidential cycles I've seen, but I'm sure there were specific days as well. What's it like trading into Thanksgiving? And I think from memory, I think most of the holidays are pretty good. So
Yes, I
there's
think so. It's buying into the holiday, I think, isn't it?
Yes, yeah. So we've probably got a. I think maybe by the looks of the way that the market's going right now, I think the rest of this week is probably going to be pretty strong. We have got some data later, which may be the only potential kind of dampening here. But it looks to me right now that the market may well be pretty strong for the rest of the week now.
Yep, cool. I did have a site that had all that stuff on it. I can't remember what it is. I'll see if I can find it before we close today. I was also going to look at the
There we go. Market open.
open trade, the pound US dollar open trade, And I've also taken first profit on EuroCAD. Those of you who
Brilliant.
were in that trade from last week, that's now just past 1-to-1. So that is that has been a very slow burn. That was last Wednesday. 1 week ago, we took that trade.
Nice work, mate.
And yeah, painful, mate. I don't like sitting in the market that long without.
Well, just on the pound, it's been a fairly interesting political 24 hours in some respects, because Jeremy Corbyn was asked. Jeremy Corbyn's main problem right now is the anti-Semitism that seems to be plaguing the Labour Party. There seems to be a lot of discussion about anti-Semitism, and he's finding it really difficult to shrug that off. That the row about anti-Semitism, but they still are doing pretty well in the polls. The last poll that came out, I think Labour were a couple of percent up and the Tories were a couple of percent down. And it is putting some stress on the pound. And there's no two ways about it. That's what this is. That's what it's about. That's what the downside in the pound is related to. Just the fact that that Corbyn is actually eking out some gains and some political tailwinds, and the Tories are hitting some headwinds. But what's been quite interesting is that the Tory party quite recently, I don't know if you were a party to the Grenfell Tower incident where you are.
Yes, absolutely.
So the Grenfell Tower incident, was obviously pretty horrendous, and there's a politician here called Jacob Rees-Mogg who's very Marmite, and he is the man that had the silver spoon wedged firmly in his mouth when he was born. And recently he said on a radio interview that the common sense thing to do would be not to listen to the emergency services and just get out the building. And obviously that is suggesting that the people that remained in the building after calling the emergency services were a bit stupid. But the Conservative Party, and it didn't go down well. But they were very clever.
Why?
Well, this is the thing. But you see that the Tories have been very clever. They've sidelined him. He's a very prominent politician. He is the leader of the House. But they've been very clever in sidelining him. So where scandal and controversy may well have started to flare up, they handled it instantly by just going, "Keep your head down." He wasn't even at the manifesto launch, from what I gather. So, which is, obviously that's the most important political document that a party can release before an election. And the fact that the leader of the House wasn't there says it all about their strategy, which is any controversy, just sweep it straight under the carpet, and when it's all cleared up and we've done the election, come straight back out again. That's absolutely fine. But the Labour Party can't do that, because really the controversy focuses and revolves around Corbyn's lack of leadership and lack of action on the problems with anti-Semitism. But if he could get over that hurdle, I think the Labour Party, and I was saying to Julian, Paul, Ainsley and Justin the other day, which I don't think they really kind of necessarily agreed with me, which is fine because it's all opinion. But my opinion really is that this thing ain't over, and don't be so comfortable thinking that the Tories are going to breeze through this, because the proposition of a hung parliament is very present, and we've still got a couple of weeks to go before the election. Corbyn may still have the chance to deal with the anti-Semitism issue and try and clear his name. His brand is all about being fighting for the underdog, fighting racism, fighting Islamophobia, fighting anti-Semitism to a degree. But because one of the leading rabbis have come out and said that he's not fit for office because of the way that he's dealt with the anti-Semitism row, it really hasn't gone down very well with the polls and with the voters. So it is a huge challenge for Corbyn of how he's going to deal with the issues of anti-Semitism and in the party. But if he can, as I say, if he can get through that, then I don't think this is a done deal at all. And I think there's every chance that we do still see the high prospect of a hung parliament. and bringing that back to the pound, that will inevitably give the pound some tumultuous seas to travel through. And every time there's a quite important poll out tonight, just to bring everybody up to speed. And if that poll comes,
before you go on, that kind of suggests that, sorry, the market's kind of suggesting that that's the case at the moment. So
absolutely,
what I'm seeing is that agreeing with you. Yeah.
Yeah, absolutely. Yeah. And I think that's the thing. If when we see these polls coming out swinging towards the prospect of a Labour Party gaining, not winning but gaining, and the prospect of a hung parliament is very present, then if it manifests itself into the price action, then we have to take that seriously, and we have to appreciate that that traders, out there of the pound are concerned, and those concerns, as I say, may end up kind of manifesting themselves into some further losses for the pound, and it wouldn't surprise me at all to see the pound continue to dip over the next 24 hours. And as I say, that there's an important poll out tonight. I'm not sure which one it is. I'm not sure if it's Ipsos Mori or whichever one it is, but it has been touted as an important poll. So watch out for that. Because if that does suggest the same thing, now the anti-Semitism row may be enough to curb the enthusiasm of the polls, but if it isn't able to do so, then watch out for those polls, because if those polls suggest that the Tories and the Brexit Party, by the way, are both losing ground and Labour continues to gain ground, then the pound has probably got some further room to run to the downside.
Headwinds, okay.
Yes.
Mate, whilst we're on the subject, perhaps I'll just better pinch the screen and go through. I've been trying to go back through all of my stuff, and I still can't find this London Open trade on the pound, but there is one that I wanted to point out, and I'm not necessarily saying trade this by any stretch, guys. What I'm saying is something worth looking at. And since we are trading the London Open per se, well, why not have a look at these things, I think. So let's take a look, and I'll show you this particular method. As I say, I'm not trading it, so it's not my strategy. It's just one that I've picked up over the years that I don't know if this is the one I used to trade, but it may well have been. What they're looking to do is they're looking to trade the breakout. And this is very similar to how I trade FOMC, NFP, all of those types of breakouts when they appear.
Does this relate just to the pound, mate, or is this something that people can trade on the euro as well?
No, it's just the pound. The strategy's on the pound.
Okay.
You could probably use the crosses like pound yen, pound Swiss, pound CAD, pound Aussie, maybe, but pretty much it's pound US dollar that's based on. And what the strategy is you take the last 3 1-hour candles of Asia session. So that would be this one, the black bar, the doji that we can't see, and that bar there. So we isolate those and put a level at the high of those 3 bars, and we put a level at the low of those 3 bars. Now that one has made this completely unattractive as far as I'm concerned. That particular bar that was the previous bar. And what you're doing is trying to trade a breakout of this. So exactly the same as I do with the FOMC trade that I call the FOMC breakout trade. You put an entry above here, so maybe 3-4 pips, whatever your fancy is, whatever you feel that's safe. The way I trade the FOMC is 10 to 15 pips above, but I'm trading on a 4-hour chart. This is a 1-hour chart. So let's say go one above the spread. So if the spreads on pound US dollar is 2 pips, then I would go 3 pips either side of that. So I'd put an entry long 3 pips above here, which would be 128.59, say, and I'd put an entry 3 pips below here, which would be 128.23, say. and if one triggers, cancel the other, obviously. Now, you don't get greedy with this, but you try and make yourself safe as quickly as you can. And you're looking to trade probably the first 3 hours, maybe, of London session. You're looking at trading momentum, basically, at the end of the day. So if we find that there's momentum and a breakout of the Asia session, or the last 3 hours of the Asia session, then you're looking to trade that and milk it for as much as you can. But don't go crazy. Don't go past. What do you call break time in London session, Ash? About what, midday?
Yes, I would actually. Yeah, there's a really interesting trade normally around about 11 o'clock, and that can run anything from 10:30 to around about midday. So yeah, midday is going to get quiet right up until 1:15.
Yeah, so I'd be looking to either move your stops really tight on that at that point in time, or just close the trade, because anything can happen from there on, I believe. So that's one of the methods of trading the London Open on pound US dollar. There are a couple more, and we'll go through those maybe tomorrow. Well, I'll go through one maybe tomorrow. It's to do with trading the second hour, the close of the second hour of London session, again using 1 hour chart. So we'll go through that again tomorrow. Very similar, but it's not the one I remember trading. I remember trading on I think it was a 15-minute chart, maybe, or maybe even a 5-minute chart. And if I can find that method, I'll share that with you as well. But that's the first one of our London breakout sessions. We're trading the open, and we're looking at the first three, or the last three candles of Asia session. We mark the high, we mark the low of those three candles, and we're looking to trade the breakout of that. So that is it for today's pound US dollar London Open trade, mate.
Nice.
Hi LT, hi Lewis. How we doing, guys?
Yeah, FTSE and S&P, Lewis. Really interesting question. I think with the S&P, how you ascertain a price when something is at all-time highs is that's a tricky, really a tricky thing to have to do. But there's obviously there's the two areas that I'd be looking at is some sort of fib extension, and also kind of measured moves. What would be the measured move? Do you want me to deal with that now really quickly, Jeff?
Yeah, mate. Why not?
Okay, so
I haven't got anything urgent, I don't believe.
I've got suspicions on the FTSE. I am in shorts on the FTSE because I think this may well be on its way back fairly soon. But with the FTSE, it's a bit easier because there is a level above, and really it's got to break above these highs, and these highs actually where it's just hit are hugely significant, and I'll show you. There's two reasons why. One is because of this right shoulder level here on the weekly chart, which we've just tipped into, and we're fading back from it right now. So if it breaks through there, then with the FTSE 100, then my next point of call will be along this trend line again on the weekly chart. So if it breaks through, well, let's say from the price it's at now, it may well have another 200-ish pips to go. It's slightly less than that, but it's in and around about 200 pips to go. I would suspect it's probably got to do that in the next 2 days, next 3 days, actually, if you include today. And the reason that I say that is that seasonally, the FTSE 100 tends to dive a little bit at the start of December. Now, if I was looking at these charts quite recently, and if we look at some of the recent history, if we look back at November last year, this was the end of November last year, dip down and then into December, and then bang, it just starts to fall. Now that was off the back of some trade wars, so we could certainly argue that was maybe a little bit of an anomaly. But then we go back to 2017, and again, the end of November, we take a dip down into the first few days of December, and then we start to rally. So we are kind of in this phase right now. We're in this kind of seasonal area I'm not sure if I can go back to 2016. Yes, I can. 2016, again, end of November, taking a dip down into the start of December, and then, but by the second week of December, we start to rally. So
2011. Come on. 2011.
2011, what happened then?
I don't know.
Oh, I don't think. Do you know what? I don't think MT4.
I'm just trying to demonstrate that you're not picking these out of your.
Oh, do you know what? I'm literally just going for the most recent one. So 2018 was a dip. 2017 was a dip. 2016 was a dip. 2015. If we go to 2015, then we are. And I'll show you why I'm talking about the recent data in one moment. This was 2015. 2015 was end of November. We got a slight rally to the upside, but as soon as we hit the first week in December, we start to drift to the downside. So we're kind of in and around the time frame where we could be looking for a dip. 2014, end of November, consolidation into the start of December, and then bang to the downside. Actually, and that lasted a little bit longer. Let's see if we can go back to 2013. Yes, we can. 2013, again, end of November, and we see this big move to the downside into the middle of December, and then we start to lift up again. So we are looking for a rally in December.
Interesting, isn't it?
Yeah, at some point. Now we go back to 2012. 2012, this was the end of November, and it was a small move to the upside, not huge, but the point is, the last 5 years, if you were kind of weighting the average of the last 5 years, then we see a dip, on the whole. Now, the reason I think that's important is, if we go back to Ray's seasonal data on his website, and we see this, then what we've got for the FTSE 100 is, as I say, I am short this market, but I may well have to. And the only reason I'm not suggesting the shorts right now for everybody and where to get in is because it's a little bit tricky to kind of like pick the spot. But really, we are in the area that I think shorts are good, but you've got to be able to manage it correctly if you are going in short here, because this is a pretty strong market, So I've got some shorts in this area. Shorts a little bit lower and a little bit lower down as well. But I'm still happy to try and get a short in up here. And I'm not discounting. I'm not discounting that. But the point, and this is the reason that I'm saying it's going to be the next few days, is because pretty much the start of December always will fail. Not always, but more often than not will fail. So even though the last week in November can be a little bit choppy to stable, as soon as we hit December, then we are starting to look for downside. Now this is Ray's chart here. We can see the very end of November, it starts to fade on the weighted average. So the weighted average would be like an EMA. So with the most recent data being the key data. And then we start to, yes, a dip in the first week of December. Exactly right. And look at this on the weighted average. It's the first week of December. We start to see a real dip down in the FTSE 100. Interestingly, historically, at the end of November, so if you were to take the last 25 years, I think this is based on, or certainly the last 20, then November's actually okay. It continues to move to the upside. But as soon as we hit the December line, we're down. So if you take the historic data, it's the start of December. If you take the weighted average, it's the start of December plus a little bit before. So we are in and around that particular time frame right now, which suggests to me, if we are going higher, we're going to go higher for the next few days, and then we're going to start to dip on Monday. And what that suggests to me is that if we're going higher, then we break through here, we've got to get up here. I'm not sure whether these breakouts are going to be too false, but you come back to the charts right now. That is a fairly bearish looking open to this particular point.
You could say that.
Yeah. I mean, look at the first 5 minutes, bang. Second 5 minutes, bang. A hold at price, fine, but we're down again. Now we are very, very close to the daily pivot, and I suspect that there still will be some buying down here. But the question is, does that buying result in a continuation of the uptrend, or does it just give us a bounce for those bears to kind of really get get involved and get a slightly better price? So we've come a long way, as we know, and there will be some profit taking that will be taking place fairly soon. So my particular stance and my opinion and my argument would be for downside. I think the risk is to the downside right now, and all I'm really waiting for is a day that actually does start to be put under stress, and then maybe even we see some downside from today, tomorrow, Friday, and then into December. But if it holds here, then I'm still looking for downside into the start of next week. But got to be a little bit careful because of those upper lines. Now the S&P that I know everybody's also trading, a little bit different in some respects, because the S&P obviously is at all-time high. So if we're trying to ascertain how far this goes, now I've got my personal opinion again on this one, which suggests to me that we've got to get back and test this level at some point before we really have a chance to take off, but that may not happen. So if we're thinking about kind of fib levels and fib extensions, then where you draw it from is probably quite key. There's an extension up here.
Isn't that always the case with?
Yes, it is, and yeah. all I've done here is taken the most recent high to low that started the rally. And the rally actually leads us up to this this 161.8 level. So we're kind of there on the fib for the extension to maybe drift to the downside. But truthfully, if it's not there, then there's some open water up to the next level, which is potentially another 200 pips. It's a long way up. Now the other way you would do it is with some sort of pattern measured move, and this is kind of an M topping pattern up here. So with that, I would kind of draw, some kind of level and some kind of bars around this. And in fact, look at that as well. The channel we're right on top of it. This is suggesting that the S&P is probably at the area, but it's also suggesting that that if this is to break area for retracement, that is, it also suggests that if this is to break out, then we are probably looking again at this area up here. Now let's bring that fib up and see if that agrees, because if there is a breakout here, then no, it's a bit shorter, isn't it? Yeah, I mean the oh no, sorry, it's right on the money. It's right. No, it's not right on the money. Sorry, the fib is the fib's actually a little bit shallow, a little bit more shallow. It's about halfway of the range of this. In fact, it's pretty much exactly halfway of the range of that. So that would be the area that I'd be looking at the S&P, coming back again around about the 50% move of this particular measured move, and also the extension of the fib. But realistically, this area to me is starting to look pretty convincing for a retracement, because we already have the first point of extension on the fib, and we also have this the top end of this channel. So I don't think it's got any further to run at this particular stage. That's my personal stance, my personal argument, and it'd be the same with the FTSE 100.
Interestingly, the S&P, I'm looking at a SeasonX thing here at the moment, trying to draw a line through what Ray's saying, what you're saying, and what this one's saying, because I find it fascinating that you can look at different seasonal charts and get different results. Yes. And of course, everything is dependent on what period of time you're talking about. And as Ray's stuff is weighted, and this doesn't take that into account, of course. But it would seem that the S&P has a terrible time in the first week or so of December.
Yeah, well, let's have a look at the S&P, because we just checked out the FTSE. Let's have a look at the S&P as well. Okay, so S&P.
I've got it going downhill at a rate of knots.
the first week of
first couple of weeks actually.
Couple of weeks of December. Let's have a look at that. So this is the S&P.
You get the Santa rally, of course, right on Christmas.
Yeah, I mean, yeah, it doesn't look quite as probably quite as extreme as maybe what you're looking at, but we are definitely seeing it here, aren't we? We're definitely
Mm.
seeing
Yep.
some weakness in the S&P when it comes down to December. So yes, S&P starts to cut down. We've already seen the FTSE starts to cut down, weighted average, and the general kind of seasonals. Buying on the 21st of October to the 31st of December's result is positive returns of 70%. So what there is a suggestion that if you were to buy here, then you would just hold. But the way that we are, because we are traders, we are looking at these dips. Dow Jones eases to the downside as well in December. The Nasdaq is pretty much the same in December. The DAX has a huge cut to the downside on the weighted, but even on the general seasonals, it cuts down. So you can see kind of like world markets generally have that dip in December. The Nikkei is the same. Hang Seng is the same. So there's probably some seasonal headwinds on their way, which is going to make people fairly spooked out, I would suggest, at such lofty levels up here. But we do need to be careful because the seasonals are just a guide. They are not by any stretch a trigger to get us into to trade. So you'd still have to.
Trying to time that is a folly, is a fool's game. Yeah.
Yes, it is, and I think you'd certainly want to make sure that you were getting your setups correct. With that, trying to get your shorts in the market. There's certainly a suggestion, mate, that we do come down. But I suppose the other thing about that is because of that, if the FTSE 100 was able to break through this level, then this area here becomes to me a huge red flag of an area, because it would suggest at that point that we have got incredibly lofty and missed out a potential season in the markets where there is a natural point of pause. So if it doesn't pause over the next few days and gets up here, then look for a significant move to the downside.
You'd be rubbing your hands together if that's the case, mate. I think.
Yeah, do you know what? I wouldn't mind that at all. That wouldn't be the worst thing in the world, as long as I can get my long in, and it doesn't become a difficult long, because I don't like trading breakouts. But inevitably, when you're hedging, that's ends up, generally speaking, the way you have to play it. And the reason that I say that is because the last thing you want to do is hedge. And the reason you don't want to hedge is because you want the markets to behave and do what you need it to do. So I don't like pulling the trigger on a hedge, and that means when I do see these dips that I've just seen this morning, it doesn't encourage me to get in, because I'm just looking to see whether the dip is weak enough to kind of get us down. But I think what's quite interesting is that this has been a fairly significant and vicious move to the downside in the first few minutes. And if we look back to yesterday, then we see the same thing. The very first bar yesterday, the first 5-minute bar was this one. So we're starting now. Now we've got two opens that both suggest is the first 15-minute bar of yesterday's first 15-minute bar today. So we've had two opens where the move to the downside in the morning have both been fairly animated and elevated. You've got to say that has to show some indication of what may be going on here, because we are.
So do you read that as a test? Someone's testing what's available down there.
Do you know the way I look at it is that there is the smart money, if you like, and the not so smart money, and the not so smart money will continue to buy, where they can. And I don't know if you remember when we were talking about gold not that long ago, then we were seeing huge dumping in the market at specific times of day. And yet gold didn't really kind of tank until a few days after. And I wonder whether that's what we've got going on. We've got some peeps,
That's what I'm saying. I'm
yes.
looking at that as a test.
Yes. Sorry, I didn't understand the terminology, but
it's
yes.
Dipping your toes in the water, basically.
Yeah, I think so. I think that there's some people clearing out of some positions, and probably, they're obviously they're holding some huge positions, so they can't just hit it all in one go.
Mm. Yep.
And we'll see the dips when the speculators also get out of the market. But if I consider this to be a kind of commercial trade, then that would suggest to me that some of the commercials have probably managed to dump out, let the market rally some more, dump out a little bit more, and maybe they'll do the same over the next few days, and maybe that suggests the market's probably still got some legs, while the not so sensible money continues to buy it up, and gives the opportunity to those commercials to get out. But it's difficult to know. I don't know what it is moving this market, but I do think that's fairly significant when you see 2 consecutive days with
Yeah,
such.
it makes perfect sense.
Yeah, and this is a big bar, isn't it? When we think about this period here, I think that's probably the biggest bar we've got, and this is the second biggest bar we've got. Both of them have been on the London Open, so it looks to me like there could be some movement going on here. So yeah, I think it is probably an indication, mate, and those indications are just that. They don't necessarily precede an instantaneous move, as
Yes,
we.
we don't know. It once again. We're speculators. That's, at the
Yes,
end of the day, that's what we are. So,
yes,
and that's what we're speculating. We're speculating that there's something coming,
yes,
and
exactly.
there's some people just testing the waters here.
Yeah, exactly, mate. And this is another reason that I'm reticent to kind of get in a hedge, because I think the hedge might become more and more sticky as we go on. So, there'll be a point where I will have to get one in, and I will do. But right now I'm fairly cushioned just to sit out and wait, because my personal stance, to kind of reiterate again, it is for some downside coming.
Yep. Should we take a look at some currencies,
Let's do
perhaps?
that. Yeah, let's do that. I'm interested in the Kiwi. If you've got anything on that.
I've got a chart, but I haven't had a look at it for a couple of days. But I'm happy to do that. Sure. Let's start with the good old ship euro. I think.
Yeah,
Wow, what a slow burn this has been, and I'm not in a euro trade at the moment, except I'm trading euro CAD. But I've been waiting and waiting and waiting for this to do something at this trend line or this trade line, and so far it refuses to do that. Just slow motion. There's nothing happening. We went up, we went down, and we seem to be happy at the bottom of this range for whatever reason. I'm waiting for that to tell me, because I think we will move from here. There's no question in my mind that we'll move from here, but which direction that is yet to be determined. I'm waiting for it to show me, and the best way I know of signals is trend lines and trade lines and levels, and I've got perfect examples of those right here. If we go out a little bit wider to the daily chart, you can see that this is very early in this range because we've only had really 2 lows and 2 highs. But I'm expecting a third low, and I'd like to see that get there. It just won't go there, and then tell me what it's going to do next. If we get a break of the trend line or trade line, and then consolidate and get back above this area, then I'm a bull. But I'd wait for a retest of the trade line before I traded it. That would be probably my preference. The second scenario here is that we break this low and retest the trade line, the bottom of the range, and even that low, and then I'm a bear. The one thing that really stands out in this chart to me is this higher low is still in play, so it hasn't been taken out. That gives me a bullish outlook. But on the other hand, and this is the quandary that I'm in, I really don't have a bias. I don't see a reversal pattern here. I did here with this double bottom, but that's been taken out. And if I'd seen that higher low on the back of that double bottom, then I'd definitely be a bull. But because we've got that lower low, it makes me second guess myself and say, well, really, where are we headed? therefore I go back to the main theme, which is bear. You very, very, you'd have to struggle hard to convince me that this is not a bearish scenario. So it's very, very tough, and all I can do is continue to trade the range, and that's what I'll do. If the range is broken, then I become a bear. If the range is false broken, then I'm a bull back to 111.60. It's a pretty simple formula, really, at the end of the day, but nothing's happening at present. Cable, look, gee, it's tough to trade. It really is tough to trade on the smaller time frames. But as I continue to say, if you are willing to take positions on this, and by positions I mean longer term positions, you should be doing okay, because it's acting perfectly technically. It's coming off the tops of ranges, going to the bottom of ranges, going back to the top or near the top, false break to the bottom, higher low here, trade it to the top. This is the quandary we're now in, because we're dead set in the middle here and nothing happening, and that makes it very difficult to trade. So you just sit out and wait for it to come to the bottom or the top, and then look to trade it off the bottom or off the top. Again, the formula is very simple, but you're really taking high risk trades if you're trying to pick a direction here right now, because we're neither at the top nor the bottom, and that little breakout trade that we're looking for on the London Open hasn't yet triggered. Maybe if you really must trade, then maybe that's a way to go. I don't know, but I don't want to know about pound US dollar, frankly, until I hit the bottom or the top, and then I'll trade it accordingly. The Aussie's a little bit more interesting. I've been waiting on this to rally, and it seems very reluctant to do that. Why am I waiting on it to rally? Well, again, I go back to the bigger picture, and I see this base, which has been long suffering, I suppose. It's been very much like I've been talking about, very slow burn that we're getting, but technically we still have a higher low in this bar here. Let me just go a little bit closer to that. Well, actually, has it been taken? May have been taken out technically, I suppose. Let me move my control panel here and confirm that, but it looks like this low is now lower than this one. Low of that bar is 67689. The low of this bar is 67674. So technically, we now have that taken out. I'll call that an equal low, if you like. It's like 0.15 of a pip or something. So nothing worth talking about. I still think this is bounce territory, and I still have this target up here in my mind. Why? Sometimes it's just a thing. And I know that's a terrible thing to say, but sometimes I see these things and I think, well, how are we going to get there? How are we going to trade this to there? Because to me, that stands out like a pair of dog's testicles. And when I see that, I think, okay, how are we going to get there? My obvious answer to that is we're going to rally. How are we going to trade the rally? Well, we look to trade off support always when we're looking to trade long. We do have the base. We've got every right to think this can reverse. There's no question about that. It's just a matter of finding an entry and finding a safe entry. And currently one doesn't exist. But, you know, this is the reward I'm looking for. It's about 300 pips, 350 pips. That'll do me. I'd be more than happy with that if I can find a way in. So I've got the plan in mind. I just don't have the means to do so.
Yeah, it's a tricky one, the Aussie, isn't it? I mean, wasn't there some was there a banker out overnight?
Yes, last night we had Jerome Powell, not Jerome Powell. We had Phil, what's his face? Can't even think of his name now. Anyway, the RBA governor, Philip Lowe.
Yes,
he was talking about the means that reserve banks have to control monetary policy. And he used 4 examples, one of them being interest rates, of course, the other being QE, the other 2 I can't remember off the top of my head anyway. But that was very interesting, and we saw the Aussie move as a result of that. You probably can't really see it in this chart, but if you looked at, let's say, the 5-minute chart, we saw a fairly substantial move on that. don't look at the 5-minute chart. I can't even see anything on that. Let's look at the 30-minute chart and talk about yesterday. If I can actually find yesterday, come to me yesterday. Yeah, this bar here. So that's where he was having a little chat about all of that, and I think the market was very confused about what he was saying. He was saying on one hand that we're running out of options. I think.
Sorry, mate. I just want to say that there is a trade on the FTSE if anybody's interested in a short.
Go for it, mate. Go.
The trade is the short. Now the trade will be the break here. Now we do have to be careful. This market is strong, so you know this is what do the guys call it? It's a discretionary to the best really. But under this price bar here, so you're looking at around about.
Share your screen, mate.
Oh, sorry, is that not on? Oh, okay, here we go. Share. There we go. Yeah, it's under this price bar here. So, you know, this is a 5-minute chart. So if you bring up your 5-minute charts, then you're looking at under this price bar here. So you're looking at around about 3 pips away from this point here to try and get your entry. Stops at the high. So let's say around about a 25 pip stop loss and see if it breaks down. In actual fact, you'd be pretty much triggered in the next 3/4 of a pip. So so you might want to take a market entry if this breaks down 1 more pip from here. So it's 74.16 on that. Your price will be 74.19. So sorry, 74.20. 74.20 for a FTSE 100 entry to the downside. So you're looking to sell it with stops at the highs, and I'll bring you the exact chart that you guys will be looking for. So you're looking at 74.20 for an entry, which is just there, and stops at the highs, plus a couple just to kind of give you the spread. So you're looking at around about yeah, it looks like 22, but call it 25. Just give yourself some decent room. 25 pip stop loss. In actual fact, you wouldn't be triggered in just yet, but you've got to be careful of the pivots, because there is a pivot just a little bit lower. So you may choose to kind of put your stops at break even early. You may choose just to let it run and see what happens, because if it breaks down, then it's going to break down hard and a long way. So this is positioning really for next week. Which does make it tricky, because obviously we're not really that close to next week as yet. I'm just going to bring this onto and see if we can find the pivots on this chart as well. Yeah, so you got to be careful of this pivot down here, and at that point you may want to maybe take half of the trade off. It's only 13 pips, so it does seem like you're not really getting much risk to reward, but it is a long-term trade, and the target for that is going to be way down, probably near where the weekly pivot sits at 73.15. So you're looking at around about 100 pips for that 25 pip stop loss. So looking for around about 4 to 1. And as I say, it wouldn't have been entered just yet. You're still a little ways off that. It's very discretionary. This market is still very strong, and it might be a little bit early, but just to bring it to you that's really my personal stance. You know, that's the way that I'll be playing this FTSE.
All right, mate. Happy days. Let's go back to the Aussie and see if we can sort this one out. Then we'll have a look at the Kiwi, and then that's just about me. I've got no trades at the moment.
Great.
Okay, we're talking about the Aussie, and we were talking about what were we talking about? Let me come back to. Okay, we're talking about whether this was viable still as a higher low, and my opinion being yes, and I've got a big target up here, etc., etc. I think we could actually get into this, and we could get into this reasonably quickly, I think. Even the daily chart's giving me the opportunity here. If today's candle was to close as is, then we get back above the trend line or trade line and then retest it. So by the end of the week, there may well be that trade on. But just like Ash is doing, if we can't wait for the daily chart, then we could probably find a way in on something a little bit smaller in terms of time frame. Now we've got a classic slingshot set up here, one that I love to trade. Can I trade it with any safety is the question. And my answer is risky, very high risk. And that is because, number one, we don't have technically a higher low, or do we? That's what I was talking about before. Is this the higher low? Look, I really don't think so. I think this is just a mess, to be fair. What I really like to see is price get up to maybe the resistance level, then come down, then put in the higher low. So really the higher low hasn't yet been formed. But this is very, very tempting to take a long here. The big problem that I've got is trading straight into resistance. We have come through resistance, which is good. So we're getting above that first resistance, which is the trend line. But then we're trading straight into this high here, which was the speech that we had yesterday from Philip Lowe. And then we've got this swing here, which is, it's only 8 pips away. That's my problem. I think we can get a fairly safe, if there's such a thing, stop loss under here at a relatively low pip risk. So, about 25, 30 pips if you want to go a little bit further than that. And then we've got still resistance here. So it's all over the place. We've got resistance. That's the problem. If we do want to go into that, then we are really taking on a lot more risk than we probably need to do. So yes, I can see it. Do I want to trade it? Probably the answer is yes, I do, because I think this can go a long way, as I said before. But is it high risk? Absolutely. Very, very high risk. If you want to take the trade, take it, but really don't risk too much on this at all. And I'm considering if I want to take it at all, to be fair. Look, the problem is, if I'm sitting here by myself, I'm going to take this trade, right? The issue is trying to teach you guys to be full of restraint and don't trade anything that's high risk. So the way to go about that is, okay, I will place the trade, but I'm going to call it at extremely low stake. So put like 1/8 of 1% on this. And here's the thing. If you do get taken into the trade and you come to the resistance level, break it, come back and retest it, that's the time to load up on it, right? So this is kind of a FOMO thing, fear of missing out on the trade. So that's not the way to trade, in my humble opinion. But I do see the setup, and that's why I am prepared to take this, but at very, very low risk. So I'm going to take 1/8 of 1%. If it breaks resistance, comes back and retests it, then I will load up on that by probably another 0.5% or something like that. And then if we get above the monthly pivot, come back and retest it, I'll load up again to trade it up to where I think the target is, which, as I said before, is right up here. So that's why I'm kind of keen to get in, because this higher low still does exist. And the FOMO effect is there, of course, and that's one of my little foibles. I'm not so much a FOMO, I'm a FOLO type person, fear of losing more than fear of missing out. But here we go. So take that position, guys, if you want to. It's the 4-hour chart, sorry. The entry would be at, let me get rid of the control panel. The entry would be at 67.93. So 0.6793. The stop loss, let's get it about 4 or 5 pips below here at 67.62. Okay, 67.62 is your stop loss. 67.93 is your entry. You need to be taking profits, at one of these resistance levels. Let's call it the trade line or trend line. No, it's a trade line, not a trend line. So you want to be taking profit at around about 10 or 12 pips, something like that. Take your first profit, get a little bit off the table, keep your stops where they are, and then, as I said, if you get the break and retest, then you can load up on it, add another 0.5%, and go from there. So that is Aussie US dollar. Mate, you want to have a look at the Kiwi, right? Kiwi, here we are. What I see on the Kiwi is a range, number one. Let me have a look at that. We'll close it in. We'll go from there and we'll go down to, we might as well use those lows.
Yeah,
so
the
I've
Kiwi.
got that locked into a range.
It's interesting as well because that would have had some impact, wouldn't it, on the Australian
yes,
governor?
Absolutely. It's amazing how closely related they are. They just move in tandem most often. What are you're seeing an inverted head and shoulders here? I'm guessing.
Yeah, I mean, I suppose it's more. I would close that FTSE trade, by the way, guys. If you're in it, it's just given a little reversal bar to the upside. Might be a better opportunity later. The inverted head and shoulders does interest me on the Kiwi for sure. But it's also the cotton, the seasonality, I think is quite interesting too.
Which is still bullish.
Which is still very bullish, yes.
Yeah, I can see that. Can I trade it? No, not at all. But maybe there's a way. Maybe there's a way. See, I'd like to see it come down, Ash. If it would come down,
yeah,
and do this again. So get down here, get through the monthly pivot, fail to get through the bottom of the range, get back above, and then retest. Then yes, please. I'll be all over that one. That looks good to me. And maybe we can see a bit of sentiment cycle here as well. Maybe we can. Oh, yeah, I'm okay with that. That looks a bit sentiment cyclish to me. So I'd be happy if this were to retrace and even go a little bit lower than this, and then look for a long. I'd be happy with that, Ash.
Yeah.
Do you see a bit of sentiment cycle yourself or not?
Yes, I do, and I suppose when it comes down to it, let's have a look at what phase that we'd be thinking about here. So, sentiment cycle. Let's bring this one up. It's not my favourite. Actually, no, let's not use that one.
I've got one, but it's on a different computer, so I can't.
That's okay. That's okay. Which is the one? Oh, I like this one. I quite like this one here. So
I'm calling this anxiety, right?
Anxiety, yes, I would be in agreement with that. Yeah, wall of worry. So yeah, so you'd be looking for this aversion to see if there is a long in the market. Yeah, I like that.
Yep. So we're looking for a dip down here.
Yes.
And then look for a long.
Yes. I like that. Yeah, I think that's really good.
So yeah, I'm in full agreement, mate. Then that looks quite cozy.
I mean, that is. Oh, sorry, mate. I haven't shown you the sentiment. I'm just going to quickly show the guys because I love actually what you've done there with that, because actually, it's almost just right on the money, isn't it?
It's pretty close, mate.
It's pretty close. So what Jeff's talking about, really, we've seen this. You know, if we think about the inverted head and shoulders area, Jeff's talking about this kind of anxiety area. So an aversion to the downside, and then we start to see a genuine move up. I really like the message there. If you bring your chart back up again, now we've had a look at this, then that might bring some context in as well.
Yeah, this is very, very close to it, and that's why I said I'm not sure I can do that. Hang on a sec. I seem to have lost the ability. Oh, there we go. Okay, so you've got that mental picture, guys, where we've come down off the highs and we've bottomed out. we put in what looks like it's pretty messy, but it's an inverted head and shoulders.
I haven't got
And
your
we've come
chart
back
yet,
to
mate.
retest the last high before we bottom. Right, that's the key there. So that is.
Oops. I haven't got your chart just yet, mate. Oh, there you go.
So this is the last high before we bottomed, right? And that's the key for me.
Yeah, yeah,
This is
yes.
the last high before we bottom, and
Yeah.
we've come back to match that.
Yes.
We've matched
Oh,
it
yeah,
again.
nice. Yeah.
Yeah. Now we're looking for the dip.
That's really interesting, mate. So is that quite key for you when you read the sentiment cycle? You know, you look at that high as an area. Do you know what? I've never even considered that line, but yes, now I see looking at the picture that the line is actually drawn on the image.
Well, that's where price is. That's
yes,
that white line.
Yes, yeah,
absolutely. So yeah, look, I haven't seen as good an impression of the sentiment cycle as I am right now for quite a while. I think that's about as good as it gets.
Gosh, that is really good, isn't it?
That enthusiasm. So you're looking for a low in this vicinity, guys. We really want to take out these lows, and what that will do is provide extreme liquidity for the market, and then we should see this rally quite quickly. Just saying.
Yeah, I like that a lot. I think that's been brought to the attention beautifully. So we are looking potentially, long Kiwi, and it might be that the long Kiwi actually manifests itself into a better cross than the Kiwi dollar, but certainly the Kiwi looks like a pretty good chart, doesn't it, right now? And I wonder what's going to provide that aversion.
Yeah, don't know. There's not much happening from a fundamental point of view. Well, is the Kiwi news finished for the week? I'm not sure.
I think so.
I'm looking at the calendar now to.
Me too. So we got nothing today. Nothing. Building consents. That's not going to be anything specific. A bit of Aussie stuff. Yeah, it looks like it.
Okay, so it's probably got to come from the dollar somewhere, and that of course is quite on the agenda. Although, gee whiz, it's hard to trade against the dollar at the moment, I would have thought.
Yeah, 6 weeks of upside, I think, with the dollar. But yeah, well that's the thing, though, isn't it? Because that's what you want. You want the dollar to strengthen, so the Kiwi would weaken significantly.
At the moment, yes.
Yeah.
But what I'm saying is, once we reach that aversion point, how do we then? Well, we've just got to trust the levels, I guess.
Yes.
Simple as that.
Yes, I think you're right.
That's very interesting, mate. I'm glad we saw that. I'm glad you pointed me towards that, because as soon as I saw that, I said, "Wow, that's really a setup coming."
Yeah, it could be, couldn't it? And it's one of those ones we'll be a little bit patient on. But certainly the commercials seem to be pretty heavily invested in the Kiwi, so it's just waiting for a trigger now.
Okay, but I might be happy to trade this down to here as well. There might be a trade.
Yeah.
What's the 4? Yeah, look, it's perfectly set up. All we need is a little fall break at the top of the range or that trend line, and away we go. Down. I
mean, would this be one that we could be interested in going short to go long? Even
absolutely.
Because, yeah,
I can see it. There's a good scenario here. We've got lots of little traps, so if they fall into it, then I'm on. I'll keep posted on that, guys.
Great.
If it doesn't happen before tomorrow, then we'll talk about it tomorrow.
Great. Okay, mate. Well, let's wrap it up. I don't think there's anything else. I think the FTSE has kind of reversed its signal. So it's not to say that we shouldn't be looking for downside anymore, but we want to make sure we play the best signals. And at the minute, it's still looking like it might try and pop for one more try to break out. And we're better off kind of waiting on that scenario to happen, rather than fighting this market and it actually looking like we might need to take out the daily pivot to be a little bit safer. On the downside, rather than trying to trade it up here, because it's pretty enthusiastic. So no big deal. We will wait on the FTSE. Still looking strong, and it might be, as I say, next week. But let's have a look tomorrow and see what we got.
All right, mate. Now you can see the EuroCAD chart. Those of you who are still in that trade from last Wednesday, we have hit the monthly pivot, which was just below our TP1. So that's pretty cool. But gee whiz, it's taken a long time to get there. But I don't see this reversing anytime soon. I think we're in a pretty good position on this. And if we can get down to the bottom of this range, then happy days. Of course, the testing material is the monthly pivot. It could, of course, bounce off this and go long. That's not going to harm us because we have already banked. We can only win on this. Our stops are at entry, and this can only be either a small winner or a bloody good one. And I'll be happy with the bloody good one. Thanks.
All right, buddy. Good stuff. All right, everyone. We'll be back same trade time, same trade channel tomorrow. Have a great afternoon, or morning, or evening.
What time is that, mate?
No, we're going to be here at 5 to 8.
5 to 8. You bloody beauty. That's a date, and don't you be late.
Great stuff. See you later, buddy. Have a good one.
See you, mate. You too.